Okay, recording this video. It's Thursday, 18th of September 2014, and it's about 4:39 a.m. Chicago time. It's mid-morning here in France. And After FOMC was yesterday. Finally, we got that out of the way. Funny couple of days. Monday was all kind of squirrely and a dull day, low range. But Tuesday was exciting. It was like, I think it was almost 20 points in range, kind of top to bottom. I thought it would have been the other way around. I thought it would have been Monday would have been exciting with a 20-point range, and then the Tuesday leading up to FOMC would be really dull. But it kind of came the other way around. I'm always expecting that first 45 minutes of trade on the Tuesday just to be it and all over, but it kind of kept on going. It was a good trade to be had there, but I was out too early as per usual with my 4-point target. Anyway, so what happened? FOMC, 1.5 million contracts traded, and it was like a big doji bar where the open and close, were they identical? They looked pretty close, 94 and 375, so within a quarter point. Doji patterns, the open and close are very, very close, and then they're kind of either narrow range or kind of large range. That was a decent range. I wouldn't call it a long-legged doji, but what doji means is a Japanese candlestick pattern, and in general it just kind of signals uncertainty. Market doesn't really know where it wants to go, and I think that's the case at the moment. The news is out. We're all kind of thinking about what happens next. Everybody's looking forward to next year and when the Fed tightens and so on, and then we're starting to have some numbers kind of come out where people are getting ready for downgrades for the end of the year. And the numbers from Sony came out, which were just unbelievable. I mean, that was a killer brand in the 80s and 90s, and look at them now, really hurting. And who knows, I mean, the Abenomics kind of stuff's got a lot to do with that, but those are kind of really bad numbers, and we'll have a sequence of those kind of coming out with some warnings for the end of the year. And so it can go kind of either way. Seasonal trade, let's just look at this. If it's going to happen, if we're going to get this September effect and have a little bit of a dip, Friday is the day. Friday is the day when we start to, kind of really, it starts to really get interesting. So Thursday trade coming up. Friday is going to be really interesting. I think Thursday is going to be a little bit of kind of testing, waiting and seeing what's kind of going on. But the next couple of days, in terms of the seasonality indicator, this is what's going on. We've got a neutral day here for Thursday, then a bit of a dip on Friday, and then a neutral negative day on Monday. So if it happens, this is what we're heading towards. That's what we're trying to forecast a little bit over the next 2 weeks, some kind of uncertainty. So in terms of better X trend, we've got a few things going our way. Not calling this early, but if we get this sell-off, the September sell-off, these are kind of the critical type levels. So we've had the trailing stop. So better X trend is a trailing stop based on exhaustion volume, and so trends start with exhaustion volume and they end with exhaustion volume. It's a Larry Williams kind of principle, and he's dead on with that. So for example, this last move, we started with exhaustion buy down here on the Dow, and then is this the exhaustion buy that comes? This is people getting into the move early, and then they're taking profits up here. We need those kind of big players to get out on big volume. So exhaustion buy, and you can see the trailing stop is trailing back under these lows. So that kind of level, the 17,000 level on the Dow, is absolutely critical. Here we've got the S&P 500, same type thing. The last couple of days been absolutely kind of key. Now it's kind of sitting at 1980 as a critical kind of support level. That's the E-mini, so the same type of pattern. That's the weekly E-mini, that's the daily. So here we go, NASDAQ. Now NASDAQ was the weakest of the lot, and everybody's talking about this being Alibaba and so on. So profit taking before that IPO, which I think is on Friday. So we've got a couple of things coming out. We've got Scottish independence vote, which is coming out kind of tonight, Thursday night European time. So at some point during the day, Thursday in the US, and then Friday we got a massive IPO, and we've already got the weakness in the Nasdaq because we came through that support level and it's kind of flipped, and this, I call this under the lip. So it's coming back, kind of testing under the lip, and let's see if it kind of continues down. So the critical level is the last low of this little sequence, 4,500, breaks that, kind of confirms a little bit on the downside. So it's interesting. I'm not going to say either way whether the thing is going to happen or not happen, but those will be the signals that if we get the September effect, those will be the levels that are broken and everything kind of goes into a seasonal pattern, and you can see it on the indices. You can see these kind of blue professional up bars. I mean, that's what profit taking looks like. It's blue professional up bars, and then the lows of these blue professional bars kind of get taken out on the downside. You can see them not so much on the Nasdaq, but we had blue professional bars up here at the highs after pullback to end of trend. Here's the S&P 500, same deal, and here's the Russell with based on the ETF of the Russell here. So the Russell's the weakest of the lot. It kind of topped out back in April here. Then we had a spike blue professional bar after Rambo patterns, and then this last sequence up here pretty weak with Rambo patterns. So Amada's leading the way. Rambo, remember, stands for potential reversal of an Amada breakout. And so the Amadas are thinking this is going to break to the upside, and they get wrong foot, and we kind of go the other way. But here's the blue professional bars kind of come in here. We need the lows of those blue professional bars to be taken out to kind of confirm that that's actually selling going on there. So interestingly, on the higher time frame tip bar charts, we also have some pullback to end of trend rippling through. So that's the lowest time frame, 4,500 of these higher time frame tip bar charts. We had our pullback to end of trend go off on that one, and then it ripples through onto 13,000, pullback to end of trend. Kind of going on here, having had exhaustion, buy and bearish divergence on a left shoulder there. Very pretty little pattern, pullback to end of trend. But we're above resistance here on the 40,500. So that's showing that there's still strength in the market. So I'm guessing that what we'll get is kind of playing around this kind of 2,000 level during today, Thursday. And if we try to break through and it kind of fails, or comes back after pushing a little bit and it fails, that's the kind of setup for Friday being a bad day, where we really don't get any traction today on Thursday. But if it just continues to blast up and we put it on another 10-15 points to the upside and everybody's breaking to the upsides, then I think it's going to be a hard argument to make that we'll get that kind of seasonal weakness. But we'll get to know during Thursday's trade. So quick recap on FOMC. So this is how it looks on a 1500 tip bar chart. This was the open of the day. We usually get this kind of quiet trade. It kind of fell off a few points on the downside after a pullback to end of trend here. And then this is the announcement. So it comes in two waves now, because we have, first of all, the notes released, and then we have the press conference with Janet Yellen. And so there's a huge amount of jiggery-pokery kind of goes on, the volatility over the FOMC. I mean, the range here is, what is that, from 98 down to 84, 83, something like that. So 10 plus points of range just in the matter of minutes. And that's really tricky trading. And I got taken out on a stop on my first trade short 18Sep14, but then made it back on a long 91.50. So I'm kind of sitting net neutral. Had another try at a short trade here into this move. So I was kind of going short and then going long within this volatility, and when that short trade didn't work out, I mean, it's so easy for even a 4-point stop on the volatility of FOMC just to be taken out in an instant. So that's not unusual, but so I'm sitting kind of neutral, flat after two trades, and then I go short 97.50, thinking that this one is maybe enough. Because on the 4,500 tip bar chart at this resistance point we had blue professional bars kind of come in, but it's too early. There was a 4-point drop, but I'd moved my target out just to try and capture a little bit more. It made the 4 points on the way down here, but then it immediately kind of bounced back. So I'm waiting for another short trade, and the setup for this short trade was, you can see, pullback to dirty end of trend. It doesn't signal a neat little end signal like this, because that's a violated pullback level, so I call that a dirty end of trend. And of course it's so strong the market kind of powers through, but whole bunch of blue professional bars here, you can see. Blue professional bars, exhaustion buy, bearish divergence comes in, bang, we sell off. So this was a very quick move on the way down, so it's difficult to get in on any. There's no retraces here on the way down. This is the first retrace that we saw, and I was short 97.50. Yep, 97.50. And sat through a little bit of heat on this, and then bang, nice move into the end of the day with 4.5 points, got out at 93. I'd stretched my target out. I was trying to get out at 91.50 after this had been made down here, but lost my nerve on this retrace here and just kind of jumped out. So FOMC days, I normally say, we have one basic trend direction during the day, and FOMC days are the exception because we have so much kind of going on here. Obviously in the morning we had a slight decline, then we get all of the volatility during this section, then we go into a strong uptrend here, which is really nice, but then there's enough in it, enough volatility kind of going on in an FOMC trade to kind of take, I suppose you consider that a counter trend trade, because this was really the major trend for the day. Anyway, so there we go. I might tag that on, and yes, so Thursday into Friday going to be absolutely kind of critical days. We've got all these kind of big macro announcements kind of coming out, and the testing of this 2000 plus type level. See how that goes today. So there we go. Hope your trading's going well.